Welcome back, home buyers. Today we continue our discussion on the 7 types of home mortgages available for home buyers right now. So if you have not watched the previous video where we started, please go ahead and watch it and then come and watch this one. Or watch this one and go watch that one, doesn't matter. Hey there, this is KG. I'm a realtor with Fairfax Realty in Greenbelt, working with buyers and sellers to achieve their real estate goal. So if you are not a subscriber to the channel, please go ahead and do it right now. And if you're already a subscriber, thank you. Thank you. The next one is VOE loan. What is VOE, first of all, because we speak industry terminology. What is VOE?
Right. So VOE, great question. VOE stands for verification of employment. So normally, traditionally, when you apply for a loan or a mortgage, we're going to call your employer and we're going to ask them, how much do you make? How many hours do you work? How long have you been there? And so forth. So the verification of employment income or loan is basically what we're going to do is call your employer. We're going to ask them how much you make. Whatever number they give us, that's what we're going to use for income. No other documentation necessary. So yes, we're going to basically call your employer, and if they say you make 120,000 a year, we're going to use that as income. If they say you make 50 a year, we're going to use that as income. If they say you make 200 a year, we're going to use that as income. So no matter what your employer says when we call them, as long as they verify what you make verbally, we can actually qualify you for that program. The minimum credit score is a 620. It does require a 20% down payment. If you're a first-time home buyer, though, it does require a 30% down payment. And you must have at least 2 years history of employment.
Okay. All right.
But it's a great program, again, for anybody who might not report their income correctly, or just want to have limited paperwork to give to me to get you qualified. But yes, we use your employer's information of what they give us as far as how much you make, and we would use that as income to qualify for a mortgage. It's a great program.
All right. The next one is profit and loss.
Yes. So the profit and loss is another great program. Basically, so if you're self-employed, typically you have a profit and loss statement that you have to file every year or quarterly or what have you. So what we're going to do is take that profit and loss statement and use that as income. As long as it's signed off by a CPA, we will use your profit and loss statement. The minimum credit score for this program is a 700 credit score. It does require a 25% down payment, and you could use this on purchase, refinance, or even an investment property, primary or investment. But it's a great program for people that want to give us limited documentation again, and just give us their profit and loss statement. So it's a great program.
Yeah. All right. Okay. Next one is the DSDCR.
Right.
DSCR. What is that? This is an acronym that people in the industry don't know. Can you break it down?
So the DSCR is a great product for investors. So how that works is it's actually called the debt service cumulative report. Okay. And basically we will use the income of the rental property as income. So let's say the income, or let's say the rental property is going to cash flow, market value, cash flow. The market value rent is $2,000 a month. And let's say your mortgage is $1,800 a month. Well, that extra $200, we'll take that in consideration and approve the loan, because the rental property is going to profit more than what the mortgage payment is. This product is great. It requires a 15% down payment. You could buy up to 8 units with this property, and the minimum credit score is a 620.
Oh, wow.
Now, yeah, we also have another product where, let's say the market value for the rental is $2,000. However, your mortgage is $2,200. So now we're $200 in the negative. We will still do that loan. However, it requires a higher down payment. It requires a 25% down payment. It is Airbnb friendly as well. And it's a 660 credit score, minimum credit score for that program. So if you're making profit, the down payment and the credit score is lower. If you aren't making profit, it's more risk to the lender, of course. So that's why there's a higher down payment and a higher credit score. But both of them are great products that a lot of my investors have used, and I've helped a lot of investors purchase investment properties using those products.
Okay, you just mentioned something about using this for Airbnb.
Yes, so it is Airbnb friendly. So a lot of lenders don't necessarily like Airbnb, but this product does. This product will allow you to use the Airbnb income in regards to the rental income. We'll still use the market value, but well, it is Airbnb friendly.
Okay. Because even if you're using the market value, when you're using Airbnb, you're probably going to make more money when you're doing the Airbnb.
Correct.
Okay. The next one is assets utilization loan. What is that?
So your asset utilization loan is a great product for people that have money in the bank. What we'll do is actually use the money that you have in the bank as income. So what that means is, let's say you have $1 million in the bank. Well, actually, it must be seasoned for at least 3 months. But what we'll do is take the average of that $1 million over amortization, and then we'll determine what your income is based on what you have in your bank account. So you don't necessarily need a job for this program. You don't necessarily need income right now for this program. But we can actually use the money that you have in the bank as income rather than a traditional job or self-employed as well. Now, you can also partner this with another program where we can use your current income as well as the money in your banks to basically offset or give you more income to be able to qualify for what you're trying to buy. The minimum credit score is a 600 credit score. That requires at least a 20% down payment. And the money must be seasoned for at least 3 months.
Okay, so on this one, if I have the money in stock market, will it count, or money markets?
If it's liquidated, if it's in the stock market, like if you own a stock, then no, we would not be able to use it. But if it's in a money market account where it's not in the stock market, we will be able to use that money.
Okay,
that is correct.
So it has to be a liquid cash. Okay, perfect.
Exactly. It has to be liquid cash.
Okay.
Yep.
Okay, perfect. So we want to discuss some special programs that you have, because like I said, not everybody fits into the box of traditional or QM, but there are people that have special things going on with them. So somebody just got out of bankruptcy. What can they do? Do they have to wait for 3 years?
So we do have 1 year out of bankruptcy, which is great. We actually have 1 day out of bankruptcy. It requires correct. It requires a 10% down payment, and the credit score is a minimum of 660. But yes, we have 1 day out of bankruptcy. So what that means is, as long as you're discharged from your bankruptcy at least 1 day, we can actually get a loan for you. We can actually get a loan for you. So yes, that's a great program as well.
Okay, so like I said, we have a series of videos. This is just an overview of the different programs, different loan programs that are available, and Marcus has been doing it for a while. So the next video is going to be to break it down, what I needed for each of the programs and what you need to get started. So Marcus, if somebody wants to get in touch with you even before the next video, how can they do that?
Awesome. Well, you can actually apply online at approvememarkets.com, or you can give us a call at 301-945-8300. And, whether you apply online or call, or you can even email me at marcus@usamortgageexperts.com. And basically, once you give us a call, we'll start the application process. We'll start collecting information from you. We'll ask you what loan or what. Typically, I ask for all documentation up front, so that way I can solve the puzzle. It's better to solve the puzzle when I have all the pieces in front of me rather than bits and pieces here and there. However, if you tell me straight up or upfront that you want this particular program, then we'll get that documentation for that particular program. But typically, I'll ask for all your docs up front, and then I'll determine which is the best way to go as far as all of the programs that we have to offer.
Okay. Thanks, Marco. So till next time, where we're going to break down each of the program. Ciao, don't forget, guys.